Hi, I'm Mark from the Cash Flow Machine. Today, I'm sharing 3 safe and proven ways to earn monthly income from the market.
Everyone wants more income from their investments. But what if there were strategies that many investors use to pursue steady cash flow from the stock market without chasing risky trades or relying on luck? Today, I'm going to share 3 common approaches that can help investors generate income purely for educational purposes. The first is covered calls. This strategy is simpler than it sounds. If you own shares of a solid dividend-paying stock, let's say around $100 per share, you can sell a call option with a strike price a little higher, maybe $110. By doing this, you collect a premium up front. If the stock stays under $110, the option expires, and you keep both your shares and the premium. If the stock goes above $110, you sell at the strike price, locking in a profit, plus you still keep the premium. Many investors use this as a way to supplement their income while still allowing for growth. The second strategy is selling cash-secured puts. This works well if there's a stock you'd like to own, but only at a lower price. You agree to buy the stock at your target price, and in return, you collect a premium. If the stock never drops to your strike price, you still keep the premium. If it does, you buy the shares at the discount you wanted, and you still keep the premium. It's essentially like getting paid to place a limit order, and many investors use it as a patient, income-seeking approach. The third strategy is income-focused ETFs or dividend funds, such as QYLD, JEPI, or SCHD. These funds combine dividend-paying stocks or option strategies to make regular distributions, usually monthly or quarterly. While the returns may be lower compared to actively managing covered calls or puts, they require much less effort and can help provide a smoother income stream. Now here's the real strength. It's not about relying on just one of these. By combining all 3, covered calls, cash-secured puts, and income ETFs, investors can create a more balanced, diversified approach. For example, in a steady or rising market, covered calls can provide additional premiums. During pullbacks, selling puts lets you buy quality stocks at discounted prices while still receiving premiums. In sideways or uncertain markets, dividend ETFs can offer ongoing distributions. This type of rotation and balance is what's often called the cash flow machine, a portfolio approach designed to pursue income across different market conditions. Of course, like all investing strategies, there are risks. With covered calls, if a stock rises far above your strike price, you may have to sell at that level and miss out on further gains. With puts, you must be prepared to purchase shares if the stock falls. That's why it's important to educate yourself, start small, and focus on consistency rather than chasing big wins. If you'd like to learn more about these strategies step by step and explore how to build a portfolio aimed at generating monthly income, visit cashflowmachine.net. You'll find tutorials, resources, and a community of investors focused on building knowledge and confidence. Thanks for watching, and remember, steady, disciplined action is what can help create lasting financial progress. Disclaimer: this video is for educational purposes only and not financial advice. Please consult a licensed financial professional before making investment decisions.
Visit cashflowmachine.net to get started, and don't forget to subscribe and follow for more practical income strategies.